Welcome to XM.com for the Daily Market Comment for Thursday, June 2nd by Mario Sotigiriakos. I'm Cristina Marujos. The world's dominant oil cartel will convene today to decide on production targets. This is the most important OPEC meeting in a year, and the outcome could have far-reaching implications for several asset classes as the global economy grapples with the hardest energy shock in decades. There's been a dramatic change in tone from OPEC lately, with Saudi Arabia appearing willing to ramp up production and help cool oil prices. This shift has the White House's fingerprints all over it, with President Biden even considering a visit to Saudi Arabia soon in a last-ditch attempt to offer struggling consumers some relief and prevent a shellacking in the U.S. midterm elections. Reports around what OPEC might do have been mixed, but any signs that OPEC is finally willing to put a ceiling on oil prices would mean less threat of inflation running wild, less need for aggressive central bank tightening, and less recession risk, which would be music to the ears of riskier assets like stocks. It would also be good news for energy importing currencies such as the euro and Japanese yen. Over in the FX arena, it was another episode of the dollar trampling over its competitors with a little help from solid U.S. data and rising Treasury yields. The Bank of Canada raised interest rates, warned that it's prepared to act more forcefully, did not flag the housing market as a huge risk, and yet the loonie could not rally in the aftermath. Instead, it was pinned down by an even stronger U.S. dollar and softer oil prices. Meanwhile, the British pound remains hostage to any moves in stock markets, with the 60-day rolling correlation between cable and the S&P 500 standing at an astonishing 0.89 currently. The pound has essentially turned into a proxy for global risk sentiment. Gold prices came back swinging yesterday, erasing some early losses to close in the green. Safe haven demand seems to have returned, although if the upward trends in the dollar and yields persist, the yellow metal might not be able to resist gravity for long. Elsewhere, the Swiss franc is back in the spotlight after another acceleration in the nation's inflation. This provides the Swiss National Bank the perfect cover to begin raising interest rates later this year, although the current market pricing seems way too aggressive, as it implies the hiking cycle is likely to begin this month already. Thank you for watching the Daily Market Comment here at XM.com.